Hello traders, and welcome to this week's YouTube Live. This week we will be discussing the Awesome Oscillator. We'll just go ahead and just jump right into it here. The Awesome Oscillator is an indicator that was developed by Bill Williams. And before we really get too much into the Awesome Oscillator, one thing that's important to look at is just before we get into too much detail about the Awesome Oscillator, one thing to look for is really how it's calculated. And so the Awesome Oscillator, also known as the AO, is calculated off of the, sorry for my handwriting here, is calculated off of the median price, and it uses two SMAs. So the thing with the Awesome Oscillator and copious amounts of other oscillators is they're based off of simple moving averages. And so if you ask any trader who's been trading for quite a long time, John Bollinger, Bill Williams, Sean Lukas, any professional trader, anyone who's really worth their weight in salt trading wise, if you ask them what's one indicator, if you had to pick only one indicator to use on your charts, what would it be? All of them, they're going to say the simple moving average. And the reason is any indicator, Bollinger Bands, MACD, Awesome Oscillator, most indicators, they do use simple moving averages in their calculation. So if we take, for example, so we go off to the side here, the CCI takes two simple moving averages off of typical price. The Awesome Oscillator takes two simple moving averages off of median price. The MACD takes two simple moving averages, typically off of price close. And so most of the majorly used indicators are taking just simple moving averages. And so the Awesome Oscillator takes a simple moving average off of not typical price, that's CCI, off of the median price for a fast period, and then subtracts that from a simple moving average off of the median price off of a slow period. And for the Awesome Oscillator, when it was developed by Bill Williams, who discusses the indicator in his book, he talks about in his book trading the craziness of the markets, pretty much. He developed this to be a 5-period fast moving average and a 34-period slow moving average. And the Awesome Oscillator displays itself in the form of a histogram. So you'll see it going like this, and we'll pull it up on Alvio here in a second. Very similar to the stochastic, which is an overbought, oversold oscillator based off of moving averages as well. The difference really between Awesome Oscillator and the stochastic, which are these the two indicators that are most commonly sort of identified together, that are commonly looked at together. The stochastic is bounded between 0 and 100, while the Awesome Oscillator really has no bounds. It goes from a low of however low the difference between the moving averages are to a high of whatever the difference between the moving averages are. And that's really what differentiates the Awesome Oscillator compared to other indicators that do very similar identifications. So one more thing we'll sort of look at before we go into the platform is the median price. So if we have a candlestick right here, we have another candlestick here, and we have some longer wicks and some shorter wicks, shorter candles. Median price takes the high, the low, divides by 2. So we're going to have right here is going to be about our median price, probably a little bit higher than that, if I can draw this correctly. Here, median price is going to be here, here it's going to be here. So unlike a lot of other indicators where you're going off of price close, typical price for CCI, median price, price close, the Awesome Oscillator picks between the highs and lows. If you've seen the CCI class that we have as well, one of the things that was talked about in the CCI class is the fact that CCI can be used on multiple different time frames due to the fact that the typical price is the high, low, and close of the candle divided by 3. bringing the typical price usually a little bit closer to the close than the median price. Very similar calculations. They're not going to be too excruciatingly different if you just look at the typical price versus the median price candle by candle, but it does change it a little bit. And each way has its own benefits. Typical price and median price, both, since they're taking into account highs and lows, will display prices that are on the previous time frames, the previous highs, previous lows on other time frames, due to the fact that larger time frames, highs and lows are going to re-represent themselves. So that's pretty much the calculation here. So now we'll sort of switch over to Alvio, and we'll look at some of the entries that you can see on Alvio. We'll pull up the Awesome Oscillator, and we'll go ahead and really trade off of that. And so here we have the Awesome Oscillator already on Alvio. Once again, 5, 34, slow period, fast period are just the defaults. You can change these depending on what strategy you plan on using. But all in all, I mean, it's a simple moving average crossover technique. If we go onto the chart and we put on, oops, if I could click right, this mouse is new to me. If we go on and we put in 2 simple moving averages based off of these prices. So we'll have our 5 period, and we'll also have our 34 period on here. We go and we can identify areas on the chart. If we zoom in, and let's take these off, make Alvio a little bit bigger here. We can really go in and find areas where we see these crossovers happening, or where we're getting these zero line crossovers on the Awesome Oscillator. These zero line crossovers are one of the primary entries that are used for the Awesome Oscillator, just for the fact that it's a simple moving average crossover technique. And so if we go in here, we have our fast moving average, which is this 5 period, and then our slow moving average here. And so if we go in, here's our crossover point, same point in which we're hitting the zero line. So we'd go in, our fast moving average is crossing above our short, we'd enter the buy, we make those 2.9 pips. If we switch to a larger time frame here, get a little bit more drastic of a change. We have our fast crossing below our slow. That's our typical sell signal. And these moving averages are actually based off of price close, which is why they're not matching up exactly. So let's go ahead and change that. Price median. Now those matchups are happening, should be happening in the right spot. And so where we get these crossovers, we're going and we're just entering those cells just like we would with a typical moving average crossover. Making these zero lines our sell entries if we're crossing below, and our buy entries if we're crossing above. Another common entry for the Awesome Oscillator is it's referred to as a saucer. And a saucer is an area where, we switch back to the cursor here. A saucer is an area, we see them in these little dips. So saucers where we have bullish saucer is a candle or a histogram line, a line, whatever you want to refer to it as, followed by a line that is lower than that one, and then we increase right here. Certain Awesome Oscillators, not on Alvio, obviously, as you can see, but on certain other platforms like MT4 and NinjaTrader, occasionally they'll have the histogram change colors depending on if it's going on a bullish or a bearish trend. If you are trading on one of those platforms, you'll notice that they'll go from red to green, red to blue, however the colors change. For Alvio though, you do have to go in and identify where they are higher or lower. And so our bullish saucer is going to represent itself such as right here. We have a decrease, decrease, increase on those 3 candles. So this is the saucer forming. And so since this is the bullish saucer, that formation right there is where we buy. The reason that is our buy is if we look at our moving averages, our slow moving average is increasing the whole time, or it would be decreasing on these bearish saucers. And our fast moving average is starting to converge. And this is where the Awesome Oscillator becomes, by definition, a MACD, which is a moving average convergence divergence indicator. The Awesome Oscillator it starts to converge with the moving average. The fast one starts to converge with the slow moving average, and then they create that divergence. And that really fast convergence to divergence is where we go and we would be entering into that buy. And so this histogram line is higher than this one. So we go down, then we go up. This is our buy, and that buy captures that candle here. So we would catch it on the formation of this candle into the buy. And then typically in this instant right here, it's not exactly the case, but in most cases, the awesome oscillator, once it starts to turn and once it starts going back down towards the zero, that is where the divergence begins. I'm sorry, where the convergence begins, so the divergence ends, and so that's where we would be getting out of the trade. Like I said, in this case, we should have probably gotten out at the end of this candle, even though that the divergence is still growing. Once again, areas like this are where you may want to be changing from a 534 to some other periods. The periods, a lot of it can be trial and error. When it was developed by Bill Williams, the awesome oscillator was meant for stocks, commodities, and one other thing which I can't recall right now. Stocks, commodities, and something else, not for Forex. And so Forex, it gets a little different. Another thing that will skew the awesome oscillator, and which may cause you to change the periods in the awesome oscillator calculation, will be the wicks that are getting formed, and so or just the stature of the candles. If, for example, you're in a consolidation period like this, and then you get a large candle such as this one right here, following a consolidation, then that's going to drastically change the median price. You're going to have a big jump. In that slow moving average may not capture that because it may be getting 33 periods, candles of consolidation information, and then you'll only be getting one candle of a major increase. And so that'll skew it a little bit. So one important aspect when you're trading the awesome oscillator will be to watch how the candles are forming. Watching the price action as you're trading the awesome oscillator becomes a very important tool when you're trading, just to make sure that you're not getting any abnormalities, which makes the awesome oscillator really powerful, mostly powerful indicator in a trending market or markets where you're not getting extravagant movement. For example, approximately 17 minutes ago, FOMC had a meeting about the interest rates, and the rate announcement happened not too long ago. And in this case, it doesn't look like it had too drastic. You know, we had a bit of a wick here, 17 pip movement on a 15 pip candle, on a 15-minute candle. Nothing drastic for the Euro USD. We go back and look, you know, we're seeing those candles normally. So the announcement pretty much went on par with the forecast, didn't affect the market excessively much. But occasionally, if you do have those news announcements that cause those whipsaws, they'll have those really large in stature wicks or really large candles, depending on how the news went. If it was just strictly good, you get really big bullish candles. If it was good and bad, you get those really large wicks, which affect that median price. Those are the areas where the awesome oscillator isn't going to be as strong as it could be. Areas like that you typically want to be looking possibly more something like a CCI, something more off of a price that takes into account more of the candle than the awesome oscillator, which is just taking in those high and low wicks. Which is, you know, once again, the market conditions is very dependent on what indicator you'll be using. All of them are using moving averages. It's just a matter of which moving averages you're using. So if we switch to something that's probably going to have a bit more movement, like possibly the pound US, things like that, you know, we have these really big areas here. We're starting to get these transitions. But sort of going back to the entries, you know, sort of digressed a little bit from the saucers that we have. Just a quick recap, saucers are, you have a candle that's, or I keep saying candle, I apologize. You have a histogram line, and then you have a smaller histogram line following that. So you have two decreasing histogram lines in a row, followed by an increasing histogram line. That's going to be your bullish saucer, and then a bearish saucer is going to be two decreasing histogram lines below the zero line, followed by an increasing one going farther away from the 0 line is your bearish saucer, which is your sell entry. We have the 0 line crossovers, which we discussed, and then another one that we can look at, which commonly represents itself within saucers. Saucers are commonly seen within this entry, are twin peaks. And so if we go look, let's try to find a really good example of twin peaks. Twin peaks are going to be areas somewhat similar to this. YouTube, we want them to be a little bit closer in stature. So let's look and see if we can find a good twin peak real fast on a larger time frame, where we usually have the trends follow themselves a little bit more steadily. So here's a good example of a twin peak we have forming. We have that increase. It's going to, right here, it's going to 0.01, about 0.019, and here we're 0.021. So pretty close in size there, especially relatively compared to some of these spikes we got where we're seeing these really big differences in the moving average. Very similar peaks in those moving averages are showing very similar representations in how far it'll go down. And this is where you can take into account price cycles or time cycles, and how the price and time cycles, how they vary, different indicator to indicators. Instead of just using them for the pivot points, you can use them for other indicators as well, finding differences between the indicators. So we measured this decrease here. We know that we're going to probably make at least this decrease here if we're seeing that twin peak, possibly farther. Areas like this is where you may want to enter multiple orders. Nate did a good YouTube live not too long ago on position sizing, and possibly entering multiple positions instead of one larger one, 2 or 3 smaller ones. So I mean, the YouTube live like that with Nate is a good video to sort of watch to gauge how to do this as well. But if you enter, say, 2.05s instead of a 0.1, then you can close out of the first 0.05, put the take profit at about the same decrease, and then leave that second one, possibly with a trailing stop to make sure that it's not going to completely reverse on you, go hit your stop loss. But just to see if it's going to continue that bearish trend, in this case of the bearish twin peaks that we'd be entering right here. Bullish twin peaks, same thing, just on the bottom of the 0 line. You're going to see them going upwards rather than the downwards here. You can see that representation if you were to switch the slow and the fast, because since you're subtracting them, you'd see this chart just flipped. We won't do that now, but it doesn't look like there's a good representation of the twin peaks going in the bullish direction there. But those are your main entries off of the Awesome Oscillator. Once again, the important thing with the Awesome Oscillator, before we finish up here, is just going to be looking at the market and seeing market conditions. Awesome Oscillator, MACD, CCI, moving average crossovers, which is what these are. They're all examples of a MACD if you just use the definition of the MACD, moving average convergence divergence. All of these indicators are measuring where moving averages are going together, crossing over, and where they're going apart. But figuring out which one to use is really going to depend on the market conditions, news announcements, just stature candles. If you're trading a regularly trending market, an irregular market, these are the areas where you're going to want to assess different types of those indicators. So Awesome Oscillator really brings its strength into markets that have regularly sized candles, regular size between lows and highs, because that's going to get you the most accurate crossovers and things like that, because the Awesome Oscillator does use those highs and lows by using the median price for its calculation. So that's really it for the Awesome Oscillator, at least for today. One thing I will say before we finish up is in 2 weeks we will be having our summit starting on Monday. During that summit, if you're unable to attend, one thing we are doing is doing live look-ins into the summit. And so if you're unable to attend, you can subscribe to our YouTube channel. We will be going live about once a day for one of the classes a day, we hope. So if you do subscribe, you will get that notification for when we do go live. You'll be able to get that look into the summit for that 1 hour. Another thing is, if you do enjoy the YouTube lives, even if you're just watching the recordings, if you want to put in the comments sort of something you'd like to see us discuss during a YouTube live, because most of the time we're sitting in the office Tuesday afternoon, Wednesday morning, saying, oh, what should we do this live on? You know, one of the support people said there were questions on awesome oscillators and asked me to discuss that. But if you guys have anything in specific you would like to see discussed, you know, feel free to comment that. That way we can sort of gauge what you guys want to hear about in our live videos, and we can discuss those for you and get you guys that trading experience, that indicator experience, whatever it may be that you want and need. So with that, like I said, just subscribe. That way, anytime we go live, be it Summit, be it these weekly videos, if we do anything extra, you'll get that notification. Let us know what you'd like to see on the next week's YouTube Live. And if you guys are coming to the Summit, I will see you there. Otherwise, have a great rest of your day and happy trading, everyone.